Okay, my beautiful friends, and yes, you are all freaking beautiful. Seriously. And I know, because I can see you. All right, look, here's the story. This is my post-market wrap-up on this Tuesday, March 15, 2022. So, what are we going to do now? Let me tell you. We're going to wait and see. The world, literally, is on edge right now. Well, I shouldn't say the world. I would say people that are maybe slightly off, like Greg Mannarino, are somewhat on edge, waiting to see what the freak show Federal Reserve is going to do tomorrow. Will Greg be right? Will Greg be wrong? I don't know. Let's see. Again, look, I believe tomorrow we're going to get a rate hike. I'm not sure what it's going to be. 25 basis points, 50 basis points. But you see, the Fed's already walking it back. Let me enlighten you as to this. So the Fed is kind of setting the groundwork for not being so aggressive moving forward after tomorrow with regard to rate hikes. You see, they always leak this stuff out. Now, why would the Federal Reserve be walking back? Well, first of all, we got some really bad economic news. We'll talk about that in a moment, yet again. Number two, I'm laughing. The Federal Reserve is citing special circumstances, maybe like a war that they are more than happy to help fund. Oh yeah, didn't you hear? You didn't hear. Well, let me enlighten you on that too. Our President Bidenstein, yes, he just signed a government funding bill with nearly $14 billion, actually $13.6 billion, to support the Ukraine-Russia war effort and a whole bunch of other things. How much of that do you really think is going to go to aiding the Ukrainian people? I say at best 20%. Maybe I'm being too generous here. Maybe 10, 15%. The rest of it is going to end up in people's pockets like it always does. You know, like this missing $6 trillion. You know about this, right? Oh, you don't know about that? Oh, yeah. The missing $6 trillion of COVID spending. They don't know where it is. It's just vanished. I'll give you one guess where it went to. Yeah, exactly. You know this, people. We live in the biggest twisted, retarded freak show on the face of the earth. Anyway, so with that said, let's see. It's a big waiting game right now until tomorrow. I believe the hike is coming. I believe the market's going to like it. There may be volatility after it speaks. There always is. What's going to happen is we're going to get the announcement. I'm not sure what the initial reaction is. I think the market's going to gain, but it's really about the talk afterwards. When Jay Powell, the unhuman thing, opens his pie hole and starts to talk, the market gets real volatile, and then it kind of settles out. Let's see what happens, because look at the 10-year yield, 2.15. Okay, no surprise to anybody who follows this blog. I've been telling you for months we're going to settle somewhere above 2%. And I also said the market's going to like it here. I really believe that. Financials, banks, they're going to get all giddy off of it. The dollar today did reverse from being somewhat weaker to finishing at the flat line. Oh, commodities got hit too. Crude oil is now in a bear market, sitting at like $96 a barrel. I'm talking about WTI. And the energy sector falling under some pressure. Well, you know, look, we've seen a pretty startling run up here lately. And I think it's just a matter of time before it starts going back higher. Again, there's all this speculation that, you know, there's going to be an end to the war. Really, then why are we throwing another nearly $14 billion at it? How about it's not going to end? And if you think this, you know, and this $13.6 billion that was just signed into, you know, the budget of the United States, you're paying for it. That's on top of the billions that we've already spent and sent over there. And this is just the beginning too, because you know why this is actually going on. We don't have all this cash. It's got to come from the Fed. Central banks are so giddy and so orgasmic over the war and the propagation of war, the expansion of war, and everything else. I mean, that's, what they're in business to do, to fund these wars, okay? Thank you, Joe Biden and all other world leaders that are throwing billions at this thing here to fund it. And where's the cash coming from? The central banks! Oh, yeah. That's exactly where it's coming from. And it's going to be prolonged. Of course it is. So they can do this again. Like I said, this $13.6 billion, there'll be another $10 billion, another 10 on top of that, another 20 on top of that. Oh, just wait. Depends on how long they want to drag this out or prolong it. Okay, we know that Russia is going to fulfill their end game, their goal here. Okay, we know what's really going on. Putin, best friend to the central banks around the world in the history of the financial system at this particular time. Because central banks, what do they want to do? What do they want to do? They want to continue to freaking inflate. Vladimir, whatever your freaking name is over there, Putin, poo-poo. Yeah, he's got to be the best friend of central banks right now, let me tell you. So anyway, yes, the Fed is already walking back their aggressive stance here because of special circumstances. It's special this time. This time is special. I think they're all special if you get my drift. Anyway, people, I covered the market here pretty much. Cryptocurrency is doing okay. Bitcoin around 40 grand. Gold and silver, unfortunately, falling under pressure yet again. Let them play their game. We're going to play ours. Let's move forward just a little bit, slightly. Okay. So we found out that manufacturing activity, it unexpectedly fell in March. Really? Who would have expected that to happen? Because it was unexpected. And if you don't expect it, then I guess you'd be very surprised if you did expect it and it happened anyway. And I don't know what the hell I'm freaking talking about. But this is no surprise. Our economy is in freaking free fall. You know that. And we also found out, are you ready for this? This is just lovely, playing right into everything that we already understand. Single-family homes that are for rent now, the rent is skyrocketing, and now it hit a brand new record. A brand new record. You know I'm not normal, so you can just deal with it. Anyway, what else is there to say here, people? I think that's about it. Let me ask you, while we are, together talking about things, how much of anything right now is surprising to you? Like me dancing, did that surprise you? Maybe that did. No, I don't think so. You all know I'm a little touched from time to time. Yeah, it's true. And look, so as I have said here, people, this is a wait and see game. Let's see what happens tomorrow. I'm very excited about it. I really am. It's going to be interesting to see how this plays out. You got to admit, all of this is more entertaining than, I don't know, any freaking thing you want to watch on TV. That's what I think. And you get to watch me be loony at the same time. Is that a word, loony? Loony. Like Looney Tunes, yeah. All right, people, look, I'm going to end this video. You understand what's going on here. You know what to look out for. A lot of people commenting on the MMRI. Yes, I'm keeping my eyes on it. It's higher. It's moving higher. What does it mean? It means there is more risk in the market. But people, this is a double-edged sword. Again, the MMRI, Mannarino Market Risk Indicator. Link in the description of this lovely video. This measures risk in the market. I think it's the best risk indicator out here. It's not a crash indicator, people. Stop with that dog shit, okay? But it is higher. It's showing us that risk is rising, but it's a double-edged sword, meaning more risk, potentially more reward as well, okay? So, look, if you are extremely risk averse, when you see the MMRI rising, well, maybe you want to back off on exposure to equities. But if you're someone like me that has I have an almost astronomically high risk tolerance. It's really the truth. It's part of my, issues that I'm dealing with Anyway, with that said, if you are like me, then you want to be in this market here. You want to be adding to positions. You want to be taking on risk. You understand? And especially in light of the 10-year yield above 2%, we're going to settle here at one point. And I really believe what I'm telling you yet again, that the market is going to like this. Could I be wrong? Sure, I could be wrong. But we'll see. All right, look. One more time, humongous, tremendous shout out to you, all my moderators. The scammers are gone. The scammers are gone. I'm done. I love all of you. I'll see you tomorrow. Appreciate the video.